European Central Bank cuts interest rate. The European Central Bank has just made a bold move, cutting interest rates to their lowest level in years. His decision comes at a critical time, as Europe battles slowing economic growth, trade tensions, and inflation concerns. But what does this mean for businesses, investors, and everyday people? Will this rate cut revive the economy, or is it a sign of deeper financial troubles ahead? Stay tuned as we break it all down. The European Central Bank, or ECB, announced a 0.25% reduction in its benchmark deposit rate, bringing it down to 2.5%. This is the first rate cut in years, signaling a shift in monetary policy to counteract economic slowdown. But why is this happening now? The Eurozone has been facing mounting economic pressures with slowing trade, weaker consumer spending, and rising uncertainties due to global events. With U.S. tariffs on European goods adding further strain, policymakers believe a rate cut could provide relief and stimulate growth. Christine Lagarde, the president of the European Central Bank, explained that trade wars and political uncertainty have weighed heavily on business investment. She stated that while inflation is starting to ease, economic recovery remains fragile. The ECB hopes that lower interest rates will encourage borrowing, increase spending, and support financial stability. For businesses, lower interest rates mean cheaper loans. Companies that have been holding off on investments due to high borrowing costs may now have an incentive to expand, hire more workers, and boost productivity. However, critics warn that if consumer confidence remains weak, businesses may still hesitate to take on new debt. For consumers, this decision could have mixed effects. On one hand, lower interest rates may lead to cheaper mortgages and personal loans, making it easier for people to buy homes, finance big purchases, and manage debt. On the other hand, savers may see lower returns on their bank deposits, potentially reducing their income from savings accounts and pensions. Another major concern is how this move will impact inflation. While the ECB has expressed optimism that inflation is cooling, some analysts fear that lower rates could eventually trigger price increases, especially if demand surges. This could complicate the central bank's long-term goals of maintaining price stability. Financial markets have already reacted to the rate cut. The euro initially dropped against major currencies, reflecting investor expectations of looser monetary policy. Stock markets in Europe saw a short-term boost, as lower interest rates often make equities more attractive compared to bonds. However, market volatility remains high, and further developments in global trade could influence investor sentiment in the coming months. One of the biggest questions is whether this rate cut will be enough to revive Europe's economy. Some experts argue that monetary policy alone is not enough and that governments need to step up with fiscal measures such as tax cuts, infrastructure spending, and labor market reforms. Others believe that this rate cut is a necessary step to prevent a deeper downturn and keep economic momentum alive. Looking ahead, the European Central Bank has not ruled out further rate cuts if economic conditions do not improve. However, policymakers are aware that cutting rates too aggressively could have unintended consequences, including asset bubbles and increased financial instability. So, what does all this mean for you? If you are a business owner, now might be a good time to explore financing options for expansion. If you are a consumer, you may want to check interest rates on loans and mortgages to see if refinancing makes sense. And if you are an investor, keeping an eye on market reactions and potential future ECB decisions will be key. What do you think about this rate cut? Will it help Europe's economy? Or is it just a short-term fix? Let us know in the comments below. Don't forget to like, share, and subscribe for more insights on global finance and economic trends. Thanks for watching. Stay tuned for more updates on the world of money, markets, and policy decisions that impact your financial future.